Welcome to the Verify podcast by Bitcoin Suisse, your backstage pass to the world of crypto. We host some of the biggest names in digital assets to cover the latest trends and share insights not only for your entertainment, but for the love of the industry. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only. So sit back, relax, and let's dive in.
Welcome everybody who's tuning in from the screens or via audio. Today we prepared a very special episode of our flagship podcast Verified. It will center around our Outlook 25 publication. We are very excited about it because it's a first for us to record in a studio actually. We will have like a casual conversation diving into our top predictions for 25. Joining us today is Laurent, business analyst and investment analyst, Wolfgang, our crypto protocol expert, and also Dennis, research and investment analyst. Before we dive into the weeds, in November we published a very nice piece revisiting our previous year's predictions. With a very pleasant outcome, we nailed or yielded a 80% prediction accuracy, which basically means everybody that read our outlook in December last year had a pretty good idea of what is happening this year, right? And obviously we aim to repeat that and do it again. And yeah, I think we will kick things off with kind of a year in review. And maybe starting with you, Laurent, what were your 24 highlights?
Thank you, Dominic. 24, big one, in all honesty, from so many angles. You think about Bitcoin hitting the 100K. For me, I think it was long overdue. But also I had a sense in the back of my mind as if like, is this really going to happen? And is it really going to happen now? But all the hallmarks were there, from the institutional adoption, the ETF approval. And so for me, I think Bitcoin's at 100K kind of means a lot more than I think I actually can even process right now. So for me, that's just a simple one. It's also a very obvious one. But yeah, that's really, I think, quite a milestone.
Yeah, for sure. Yeah. Fully agree. What were your highlights, Dennis?
I think I pick up where Laurent actually left off. I think ETF is a big topic. It actually started somewhat easy on the regulatory easing cycle, sort of, you could say, for crypto, but it actually took the highlight or peak with the election outcome and a full 180. I mean, a few years back, we saw it with Operation Chokepoint 2.0, really marginalization of the crypto industry, banking accesses being cut off for crypto entrepreneurs and companies. So it went from somewhat regulatory easing beginning of the year with the ETFs, really big sign of legitimacy for the industry, but then really peaking now with the election outcome, full 180, and a lot of TradFi players and also crypto players are really front-running already the new administration in terms of opening up for business and the industry really being pushed forward. So in that case, for me, the 100K is almost the sort of anticipated result of all of that. All the price suppression actually over the year trading just at around 60 to 70K for the whole year and now finally being sort of released and set free.
I mean, the 100K obviously were also somewhat of a psychological huge barrier. It's cool that we added another zero now to the Bitcoin price.
Yeah, but I also expected more noise in the traditional media and people more talking about it. People who are usually waking up at some point when the bull run really kicks in. I thought that this 100K would have made even more noise. I think we're not there yet, but that's good. I would also say that's good.
Yes, but it somewhat implies that it's like we are not at peak of euphoria yet.
It was almost boring to finally cross it.
Yes.
Yeah, it was a bit animated.
To me, was somewhat like outstanding that the Bitcoin and crypto cycles just stick to their pattern. Like that they can repeat in such an accurate fashion. If we think about all of these indicators, such as like Pi cycle indicator, MVRV, like long-term holders started to distribute their supply again. Like everything is just repeating in this like super accurate 4-year cycle move.
Yeah, we learned that saying this time is different is risky. It's a little bit of a dangerous prediction.
Yeah,
we'll see. But my highlight for 2024, I also have a quite obvious one because, it happens practically every year. You have this big hard fork in Ethereum. And this year we had EIP 4844. That for me was huge. That's my highlight for 24 because it highlights and, it kicks in the age of the roll-up centric roadmap actually happening, in practice, because Ethereum was already a very good choice for consensus and DA, but now it's explicitly, in an opinionated way, a good choice because we have this two-dimensional market and you make things very accessible for rollups. And that's huge because, Ethereum is going that direction and it's taking this very, very big stance. And, I love to see it. I want to see where things are going with rollups and competition with Celestia and so on. So that's huge.
Did that also had like personal implications? Is your like on-chain activity, did it also more or less migrate towards rollouts? Because we know it now, we have like sub-cent transaction costs, which is really nice and opens up a lot of on-chain activity that was not really possible before, right?
I love rollups, but when I talk about rollups, I mean stage 2 rollups. And there are no stage 2 rollups yet. So, I like to see rollups, but I mean rollups without training wheels. Today, I really like Ethereum mainnet, layer 1, and my DeFi activity is there, still there. So yeah, personally, it didn't change much. It is a needed, required step, and it's a very, very clear, statement from Ethereum researchers and anyway the greater community, the rough consensus that they make, that this is the direction we are going towards. So I like to see that. Well, no, I'm still on layer 1, Yeah. I enjoy DeFi on layer 1. It's okay.
It makes sense. Did your guys' on-chain activity change? And if so, like why?
Interesting question. Yeah, I don't know. Hey, I think for me, in terms of on-chain activity, it's very much mostly been a little bit of trading here and there, a little bit of on-chain looking at perpetual trading like we have now with Hyperliquid, investigating more on the DeFi yield side. So a little bit more plain Jane in terms of new dexes that have come on board, but also exploring where we are in terms of meme coins. I think this cycle has definitely proven that meme coins are like the new, narrative where we're seeing a lot of volatility and upside potential, like it has been throughout, but I think the cycle is kind of unique in that sense, right?
Yes.
So
agreed.
That's where there's been, I think, quite a lot of attention. Solana's been pioneering on that.
Yeah.
On-chain activity for me has been somewhat repetitive from previous years, but still like exploring like exactly where we are in terms of new projects, new protocols, but just playing around as such.
Yeah,
what about you?
Same for me. I was actually going to say also trading mainly, dexes, swapping, but I would actually say in that regards, mainly using the layer 1 for me has been on Solana.
Yes,
on Ethereum, relatively muted overall in terms of activity or using it myself. Ironically, actually also playing a bit with Base as of more recent, and actually liking the experience there. So overall, definitely, as Wolfgang said, layer 1 is fine to use, it works. It rather depends on what sector, what narratives you want to trade if you actually go into really the crypto native altcoin plays, etc., to swap around a little bit and not do your activity on major exchanges. Then I would say it really matters actually what narratives you want to trade. I mean, meme coins or be it new AI narrative plays that you want to swap somewhere, then actually it depends which shop sort of offers it for you. So anything from roll-ups to native chain. Really no different.
An interesting angle here is, in my view, when we think about NFTs and this notion of like having this very safe vault when it comes to Ethereum base layer, we saw some NFTs gaining somewhat momentum recently. And interestingly, this was in an isolated fashion. It only happened on Ethereum main chain. So all the Bitcoin NFTs and also Solana NFTs are still relatively muted. When it comes to me and on-chain activity, what stood out was kind of Polymarket somewhat crossing the chasm and almost forcing me to bridge to Polygon.
Yeah.
And that kind of also indicated to me like how important an application with product market fit is for a chain. Like as a chain, especially since there are so many competitors, you really want to have these like high product market fit applications to deploy on your chain,
Makes
right?
sense.
What is your guys' take on that one?
You talk about on-chain activity. The one thing I didn't do this year that I did in previous years, I didn't buy any new NFTs, unfortunately, particularly on ETH, right? But no, I actually fully agree. If you talk about that, it's all about consumer adoption. If you want to look at where anything in this world is successful, it's about capturing adoption, having stickiness with your users, and it goes in any business, not just on chain. So it's really, I think the future is somewhat really going to be all about the dApps and the real consumer market fit in order to scale and see price appreciation and see on-chain activity. And when you measure the metrics on-chain, it's always the ones that have consistent on-chain usage, because we're somewhat seeing a little bit of like a fickle nature when it comes to users on-chain, particularly like when there's a expected airdrop, everybody's running to that particular protocol, and then ciao, see you later, on to the next one. Polymarket, like you just mentioned, absolute killer product. And there's been some good stories there so far this year.
Yes, I fully agree. What's your like kind of take on the application meta? And maybe this is also like opens up the door maybe to discuss a little bit about like this current notion of, hey, these like high fully diluted valuation launches that are backed highly backed by VCs are not super attractive anymore, and people like flock into more meme coins. Or also like now with this regulatory unlock that we see from the new Trump administration, there's also this notion of ICOs or IDOs coming back. Is this something that excites you? Or?
Yeah, there is that, and also there is potentially, suddenly founders can be, a bit more brave and trying different stuff in DeFi. There are more talks about sharing protocol revenues, these kind of things, activating revenues and distributing them to stakers. We have seen it last year with Uniswap, but then they changed their mind, but then maybe next year we are seeing different protocols. But in general, of course, users should care about apps first. You like Polymarket, you want to use it, you don't care where it is. The apps choose the chain and the properties of the chain, and they inherit properties from the chain. You get a better app because a better chain, then your user will care about your app and will inherit these properties from your app. So now if you're a founder, the good thing is that there are so many options. You don't need to build a new layer one. You can do whatever you want, whatever is more, useful for your app. You can build a new layer one, potentially, maybe that's the best for your app. You do an app chain, but you can also deploy a smart contract on Solana, or you can, build a rollup, build whatever on Celestia. That also works. You can use economic security from EigenLayer. There are so many options, and that's up to founders to decide how to provide the most value for the user. They should care about the infrastructure, and we are there to use the apps, I think.
Yeah, for sure.
That's how I see it. That's how it should be,
Yes, I fully
And
agree.
the apps should make revenues coming from, because they provide value, right? So these revenues can come from user fees, can come from subscription models, from ads, whatever. But you provide value, you get revenues, and then the revenues can trickle down and be distributed to maybe for incentives for maintaining the infrastructure and so on. These are how things are supposed to be.
Yes.
Not just, printing tokens and giving airdrops and incentives, liquidity mining.
Yeah.
I mean, we should move on from that.
It's a good segue into like thinking about like valuations maybe. If you look at the top 10 by market capitalization, I think there's no application in there. And there are like great reports out there highlighting how when we go to revenue multiples, how like infrastructure is still like, at least on a relative basis, seem highly overvalued compared to these applications that actually drive a lot of revenue. Do you think maybe Dennis, like, is this something? Do we see a repricing maybe in 25 of these applications relative to infrastructure or blockchains?
Wolfgang wants me to say the right thing.
Yeah, of course, go ahead.
What about stable coins? Are they application? Because they're up there in the top 10. Would you just exclude them? Because
I mean, they reflect liquidity after all. They're usually used for settlement, even not for direct transactions. So
payments, no, not really.
But I mean, payments is
USDT
rather
on Tron,
the smaller use case of it. A lot of stablecoin activities, mainly just trading, settlement. So that's also one of the reasons why I'm not a big fan of usually seeing then reports or comparisons of saying, okay, stablecoins volume was higher than Visa or something. Visa is economic activity. It's actually transactions, payments happening. Whereas stablecoins, it's oftentimes just a counterparty liquidity to settle a trade, be it the Bitcoin, USDT pair, USDC pair, etc. So you can derive a lot higher volumes in stablecoins that you would in true economic payment flows, sort of. But going back to then the general question, what I think that dApps would get a higher valuation, I think relatively maybe you see that during the altcoin cycle that dApps or the applications then pick up versus the utility or let's say infrastructure base layer, so the smart contract platform. But I think overall actually they will keep really the dominant share, because in the end it all funnels back to the infrastructure. And also talking then about some of the earlier topics, Polymarket, or what you said, user-centric applications, and not starting the newest VC project that then gets launched and gets diluted in a 10x factor over the next year or two by some vesting schedule. I think a lot of value actually gets captured by the platforms, infrastructure that can really enable user-centric or user-friendly final dApps or tokens, or for example, currently with a lot of the AI agents we see going on. So people really care about sort of launching their meme coin, their platform, their product on top of an infrastructure play. So I think the infrastructure matters still in the future, and the dApps is, if I don't want to say it in a very broad fashion, and maybe also a bit sort of not giving enough credit to some dApps, but launching a product or a program on your computer, on your Mac, and the value accrual is to the people that use the computer or build the computers, and not the people building individual programs. So I think the platform and infrastructure play will matter going forward, at least for the near-term future that we see.
Yeah, fair take. Yeah. I guess on the applications especially, I mean, there are some very established ones, such as like Aave just recently broke another all-time high. You also get like a very attractive like yield if you lend out your assets, especially since everybody like is grasping for more liquidity somewhat. And I think like these applications really offer like mechanics that many banks would really like are mind-boggling to banks even. But since we touched Polymarket, I'm keen to know, like, did you bet on Polymarket? And if so, what did you bet on?
I didn't. I think that links to the topic of the user experience. Actually, I'm quite familiar with a lot of DEX applications and moving stuff on-chain, but I think Polymarket, in that case, the difficult onboarding process.
Fair.
It's not difficult, but actually it's that extra step that stopped me from betting also on the election outcome, because I actually then transferred and already bridged everything to Polygon and was ready, but then on that platform having to take that extra step to, I think it's the PolyUSD, you actually have to bridge to eventually to bet. Some extra step that actually was then putting me off, and then I didn't care to come back the next day. But overall, I think it's definitely valid play, and I think we'll get more traction. I mean, very interesting to bet on it and dabble around
for
a
sure.
bit.
Yeah, I'm still crushed that Mike Tyson didn't win his fight, but fair enough. I guess there's one more aspect of friction when it comes to Polymarket. To me, it was a little bit like weird because they are using these smart wallets. So you have like even a different address then on top. But I think Polymarket is also a good segue into the US elections, because that was the moment where it actually crossed the chasm. So let's like dive into like what happened with Trump and what happened in the US. Like Laurent, are you surprised? Like, was this like kind of a calculated win, or is it? And what are the implications?
I think the implications are going to be huge. And I think the American citizens and people have voted very clearly as to what it is that they don't want. And also, for what they really are looking for. So when the FBI goes and breaks into your house because you've managed to successfully predict what could happen in the US election, I can't think of a better product appraisal. But the ultimate,
you're referring to Shane, right?
Yes.
Okay.
The founder of Polymarket. Yeah.
Yes.
But that is also somewhat reminiscent of the current incumbent government, right? And that gives you a very clear position or perception of their stance towards crypto. So with now the introduction of Trump, I do think that we should always take everyone's words with a little grain of salt, of course, but there's no doubt that there's going to be more pro-crypto. And there's going to be a serious challenge now globally to actually pull all new projects and dApps into the US such that it becomes a new, an entirely new business for the United States, centered around the United States. So I think that's going to have some huge impacts. A lot of innovation goes there, but also what we know about the United States when it comes to funding, they have really no limits as to what it is that they can do. And so if that's going to solve any sort of problems on chain, you can bet on the United States to fund enough to solve that problem. So I think it's really now, what does the rest of the world do? And I think let's see what Trump really does in the end. We should really maybe think about how we can discover more as to, are they really gonna do what they say? Are they gonna try and make a reserve currency asset out of it? And what kind of legalities could come about in terms of the regulations around not just investment products, because we've been stuck in this sort of investment cycle now, has begun for institutions. Are we going to see more products? Are we going to see more traditional finance-related products built on top, such as, market-neutral lending products, for example, that could pop up in like a traditional wrapper in that case? And how much deeper down the rabbit hole do we go? I don't want to bring up any spoilers, but I definitely think Ethereum is definitely likely to champion the institutional adoption on-chain.
Fully agree. And as you outlined, we now have like the most pro-crypto Congress in history, and this is especially relevant for two reasons. It's first of all, it's the largest economy globally, and then second of all, it's also the largest economy which was prior to that election really hostile and had this like restrictive oversight over this space. And as we know, like many like navigate based on what the US is doing. So this is like really, we all agree this is like the most major structural impact that the crypto industry ever experienced. And I think it will like unfold in 25 with a massive bang. If Trump really walks the talk, and not just...
I do think he will, actually. I think it was barely 2 weeks after the election, China, Russia, they both actually legalized crypto as property, and they've been full against crypto the prior years. China banning mining, banning crypto trading and ownership, and Russia pretty much doing the same, except some state-owned mining business they had on the side. But a lot of TradFi businesses, they're also really preparing again for this. So if you believe the institutions and what they're currently doing, then a lot of them are really front-running this election already. We have also spoken to some TradFi and asset management players in the US, and they all say everyone's already getting ready. So it's basically being priced in already. You never know what happens. And of course, each administration, also historically, they always try during the last final weeks of their current administration to really make it as hard as possible for the next one, if it changes, actually to not be able to change as much as they want to. But currently the outlook is actually it's gonna come, and the institutions at the sort of political embracement will happen and occur in the near term. So rather the question on our Swiss end is what is the EU gonna do? Are they gonna follow it? If we now see a lot of global players actually already seeing the shift in the US administration that's upcoming, will it actually also follow suit everywhere? Because some countries and nation states, they do, and some others, they sort of go down the road they went already in the past year. So let's see.
Frankly, I obviously hope that like the EU and also Switzerland like follow suit and get a little bit more progressive. But as you outlined, I think it's very interesting. Like there's a couple like major indicators such as China and Russia now recognizing Bitcoin again as property. But then also like which indicates that Trump really might walk the talk is also like Gary Gensler, our most favorite SEC chair, is departing when Trump gets inaugurated. So there's some early signs already of like this becoming actually true.
Yeah, we went from we will build an anti-crypto army to have a crypto czar in the White House.
Yeah.
Like that's quite incredible.
Which happens to be a Solana
by the way.
fan as well, right?
Yeah, I think it's good in general also for companies and teams that have roots in the US. We'll see if the rest of the world will catch up.
I think the world will also, or the rest of the world will not do themselves a favor if they don't follow suit.
Oh, yes.
It's not only because the US is sort of setting the tone, but as much as maybe the crypto industry likes Trump, we also know in terms of protectionism and his economic approach, anyone that doesn't play the game of the US under his administration will also sort of be left out and be left behind. Whether justified or not, that's up to a lot of debates, of course. But I think in that case, also countries will be forced, not because crypto will be adopted in the US, but anything the US adopts under a strong Trump administration will sort of be forced upon the rest of the world, or otherwise they sort of pay the price in terms of opportunity cost, falling behind economically.
Maybe this is a good moment to dive into the outlook weeks for 25. And maybe we touch base on our top predictions from our report. Who wants to start? Like, what are your top predictions?
I will start because I also wanted to say something more about the valuation and the revenues of infrastructure versus apps.
For sure.
I want to say that, in general, for me, it feels right that at least in aggregate, apps should be more valuable than the infrastructure they're built on, at least in aggregate. However, we need to remember that typically there is also this, monetary premium that we evaluate. So there is also that. We should never forget that Ether is also valuable as money, for instance. And this connects me to one of the top predictions. I mean, I like them all, but I like to talk about this monetary policy for Ether. So, there have been many talks and discussions on we should maybe think about the fact that the issuance policy of Ether, maybe it's not really sustainable for the long term. I'm talking about the issuance of staking rewards. I mean, the staking reward, the issuance part of the staking rewards. This was set at the beginning. It kind of made sense, but lately it looks like if we don't change anything, then we will have all Ether being staked, and this wouldn't be good for Ether as being considered as money. Because if all Ether is staked, what most likely will happen is that one dominant LST will basically dominate and replace Ether as money, which is not good for the valuation of Ether as a whole. So what I think will happen is that even though I like these arguments, they make sense, and I like the proposal of other issuance policies, I think that this is really a huge, huge change. And, Ethereum doesn't have like a formalized governance process, like token-weighted governance that you can see in other chains. It is based on rough consensus. And to achieve rough consensus on some huge community of developers and stakeholders like Ethereum, it's not easy, especially if you want to touch the monetary policy. So, it might happen. There are many good reasons for that to happen, but I don't think it will happen next year, and actually not even in 2026. Or at least, I would say we will not reach an agreement by the end of 2025 on having this change in issuance in the next hard fork. It's a bold prediction because, if I don't get it, it's, it's either yes or not. There is no way to make it softer. But, I think it's too strong as a change that soon. And, you might think about, is this good or bad for Ether as money? Like, there are arguments that you want to make this change because then Ether has more moneyness, but there are also arguments that say we don't touch anything, and that gives more moneyness. Like Bitcoin, you know what to expect, and that's why it's hard money, because the issuance is there and it will never change. Yes. Maybe. But
I mean,
maybe.
There's no
You never know
to change it, right?
But at least there is that perception, and that really makes Bitcoin hard money. So what do you think? Is it good or bad for the moneyness of Ethereum to make a change?
I think your call very much resonates with me for different reasons. The first reason, in my view, it's not even like a high risk, because we did some napkin math and we checked, and in my view there's a huge correlation between issuance yield, meaning that all of the protocols that have, let's say, an issuance above 10% basically force everybody within the network to stake, or like the incentive to stake is very high. If you think about ETH, we have like a net inflation of around 1%, or it's even deflationary. So if I just hold the asset, like I'm not getting crazy diluted, right? Compared to a network that has, for instance, 20% or something like that.
Right. So you don't see these staking ratios skyrocketing anytime soon?
My call would be like, we will not see like a crazy influx. It will not like touch 70%, 80% like we see in other like high issuance yield.
What about the impact of staked Ether ETFs?
There
we
will
have a
be
prediction on that, right?
That's another story. Yes, and but the other point I wanted to make is so first of all, I don't think it's a problem because the issuance itself is pretty low, and the second one is I'm not sure if it would even like be such a high risk even if we go higher, because others also have like high staking ratios. And then maybe it's also...
They're not trying to compete with Bitcoin on being hard money. So I don't know. I think Ether has this very strong advantage now, and it's important to keep it, I would say.
Yeah.
For sure.
So I think your call will be... I would like pledge for your call. I think it's not going to change, and I think it's good because Ethereum also moves into this more money direction, into this more pristine collateral asset direction. Especially since it's kind of forced to, because it got this huge competition this year from Solana, basically flipping it in revenues, and it also kind of it were huge shockwaves through the Ethereum community, right? This whole ultrasound narrative was like highly challenged, and now everybody, oh, okay, we have like these highly scalable rollups, but now we don't drive like revenue, and it's not deflationary anymore. And I think it also leads the community to maybe dive a little bit deeper into like how do we actually value these tokens, because obviously it's a hybrid asset. You cannot just like apply discounted cash flow models or something like that. You have to view it from very different perspectives. Like you can denominate stuff in your asset. It can, and it's true for all other chains, for Solana, Ethereum, and the other big players. You can use it as collateral. You have a yield on it. It can be money. It's good as kind of this oil thingy because you pay for your transactions for it. So yeah, there's this. What do you think?
You know, I think there's a couple interesting like developments right now, particularly on ETH, and I think we're focusing a lot on ETH as well, but ETH really is the beacon, I think, when it comes to it's represented by the market cap, when it comes to adoption, when it comes to the bleeding edge of crypto tech and the enablement of other protocols on top. But when Wolfgang started to mention the staked ETH ETF and so on, I think this ETF for ETH is a double-edged sword, because like you rightly mentioned, that ETH is somewhat like oil, right? It's this multi-use asset. It's not just a single narrative around just store of value. It's more than that. And like ETH just being locked up in an ETF doesn't do anybody any good. And then staked ETH also locked up in an ETF doesn't really help the ETH either way. Yeah. It's not good for the community. It needs to be out there, living, breathing, moving, fluid, like money, like water. So I see a little bit of risk for ETH in terms of like the institutional wrappers and that's actually coming through on that end. How that affects the price and the usability of ETH, I think we're still yet to see, because there's still enough supply available. But I do think it does have an impact on the network, and the bigger the market capitalization of these products, the more it's going to affect ETH more adversely than it does affect Bitcoin, since Bitcoin is just so simple and so stable, and the narrative is set, and there's nothing that's changing.
It's ossified, yeah.
Precisely. And so I think the roadmap for ETH is still evolving. But I think that also makes it a very interesting bet, given that it's the only other product or crypto chain that actually has ETF on top.
Yes.
Right. Not to throw shade on the other ones. Yeah. I mean, like I said, I think a lot of them still need to figure out their tokenomics. And they still have to figure out their value and their use case. I think if you don't have utility, you got a problem. If you're just governance, I think you also have a problem. If you're proof of staking with 20% issuance rate, you have an even bigger problem. Over time, you start behaving like a stable coin. Your price isn't going up. It's kind of like slowly just staying kind of stable, because you're just not creating enough usage on chain.
For sure. Maybe we should clarify here that one call in our outlook actually was that we, under the new administration and President-elect Trump, we will see like a swift approval of ETH staking ETFs. And we basically demonstrated in the outlook that there's just 2 institutional assets available currently, and ETH was very much muted. And also, maybe brief remark, I think it's fair to spend more time on the large caps in crypto. So it's fine if we talk a lot about Bitcoin and ETH, in my view. Yeah. But obviously, we cover a lot of other stuff in the outlook. Coming back to the ETFs, if you check the ETF flows, exactly at the date of the US elections, ETH flows picked up. Especially on a market cap adjusted basis, we have like this like early signs of what might become a sustained trend, where ETH outperforms Bitcoin in flows on a market cap adjusted basis. And just like 1 week or something like that after the elections, it went net positive for the first time, which is kind of indicating that ETH is somewhat disproportionately benefiting of this regulatory unlock, because as you outlined before, like many smart players, including Bitwise, for instance, they prepare already for ETH staking ETF. They recently acquired this like staking provider, and I feel like this like strongly implies to me that they just get ready for ETH staking ETF. And in our view, or in my view, this the flows were pretty much muted, because think about the opportunity cost if you allocate into an ETH ETF. You are missing out on your staking yield completely. This is like the 3 or 4%, and you just can't access it because the ETFs don't provide it, basically. So I think this is like a super attractive proposition going forward, and I also think this like really caters to institutional allocators, and even more so in a declining rate environment, right? So if this is happening, I think it will happen, then this might be a huge unlock for ETH. Would you agree, Dennis? Or what do you see?
There's a multitude of factors to that. I mean, I think in terms of institutional interest, if you looked before the Bitcoin ETF even was launched, then definitely I would say ETH, after its first ETF launch in summer this year, was treated somewhat unfairly, or it actually had lesser interest than Bitcoin had. Even on a proportional basis, you would have expected it would pick up sooner, actually. And we saw it literally come election night. Actually, most markets really already priced that in and tended to shift already, both in favor of generally more crypto allocation, but also then ETH actually starting to pick up somewhat, especially in institutional flows. The absolute performance is still somewhat on par currently with Bitcoin, of course. But the major issue is, of course, the ETFs did not have staking rewards. That's one issue. But actually, that also then links a bit to the discussion Wolfgang actually started earlier, the monetary policy. The issue is also you do get diluted in Ethereum if you do not stake. So you actually have to to keep your fair market value with ETH over time, also your share of the network. You're forced to stake, actually. And then you could say, it's nice that ETH now suddenly has the ETF, and maybe also it gets a staking ETF to get more institutional flows. But also Laurent addressed it already. There is issues with that, because Bitcoin, yes, you want to store it. It's okay if people hold it. But with ETH, you actually start to then yield an influence over the network. And earlier this year, I think we also internally had the discussion. I said, growing ETH and growing the market cap, it's good if it gets ETFs. But I said, maybe it's nice if it doesn't, because it would be nice if ETH actually gets more expensive in price. The network growth, the market cap growth, and the institutions have to buy it at a higher price to not get a high share of the network that easily. And if we look at actually just Bitcoin itself, we now know already the institutions, they hold more Bitcoin than Satoshi. They managed to get more than 1 million Bitcoin, more than 5%. And we know Bitcoin market cap is roughly 4 times larger than Ethereum, give or take, at current valuation. So in that case, it's actually sort of a little bit of a dangerous or risky play also. We don't know if it backfires in the future. So I'm a big fan of it. It helps legitimize ETH. It will help grow it tremendously. But we never know what are the risks. Also earlier we had some discussions already regarding the outlook, and people asked what is maybe the risk now if a lot of people buy the ETFs buy Bitcoin, or players like MicroStrategy buy a lot of Bitcoin, and the next administration does a 180 again. Are there risks to that of institutions that are centrally controlled or also attackable by nation states and governments? Will it be a risk, especially for something like ETH? For Bitcoin, we don't really care too much, but for ETH, the impact might be even more more severe than for Bitcoin in that case in the future. So there's risks, but I'm also more of the optimist on that end, that I do not think they will materialize severely, but definitely something to not discount too much in that regard.
From a consensus perspective, Wolfgang, what's your take on this? I mean, we are dealing with two different beasts with a proof of work. So, but what is happening if like BlackRock now has like 5 to 10% of ETH in their ETFs? Because they have like more impact on the consensus, right? There's like, it's like a different dynamic. Do you think it might be, it might become an issue at some point or not?
Yes, it can become an issue. We'll see. I don't know what to expect, honestly, from them. I don't know if a staked ETH ETF will make that much difference anyway. Because if you're bullish on Ether, why would you care that much? Like, why would you not invest in an ETF just because it's not staked? If you're really bullish, you would do it anyway.
It also doesn't matter with the long-term performance, right? Crypto goes up, cumulative average
I'm not
growth,
sure about that. Yeah. But anyway, there is that problem, and we always think about it like, can the chain be captured if the stake is too concentrated? We'll see, but we always have the option of social consensus and social forks. And we'll see. I mean, I don't know. I don't want to see that world, but
no, for sure not.
But it is.
It's something that you want to avoid.
No, I think if you really care about ETH, then you wouldn't actually buy the ETF. You'd actually buy on chain.
Yeah.
That's like if you really care about it, because then you can use
just
it.
if you're bullish.
Yeah, if you just want price exposure.
If
Sure.
you're bullish on the price performance, it's not missing out of staking rewards that will prevent you from doing the investment.
100%.
I think.
That's true. It might be different for institutional allocators. I guess it definitely helps to have more regulatory clarity around ETH, because Bitcoin was always like, it has this like established perception, established narrative, and
but I
also
do
the flows.
The narrative of an yield-bearing asset is something that you can easily.
It's strong. At least it then has like a very clear hook for institutional.
They are aware of the volatility.
You can either compound the staking yields, but it would also be nice if they actually just paid it out. Because then, at least then you're burning some ETH in the same time, and then people can get some fiat, and then, we're not, creating staked ETH ETFs that are maybe a little bit oversized.
Blowing up.
Exactly.
Yeah. Let's get to some performance outlook and macro. Dennis, you're the expert there. So maybe we do the round of like crazy price predictions now.
Crazy
you have
price
the most fundamentals using
then let's leave out the macro part, or maybe just to take it away up front, because you said macro. I think in terms of macro outlook, because it also matters in terms of price predictions and actually underlining that they're more valid. Last outlook, I think we were actually a bit more on the cautious end for the macro outlook. Now we're way more positive. So of course there's remaining risks and stringency sort of on the macroeconomic side, also financial side. But definitely has eased, and also what we said always was, the longer a lot of these economic risks, inverted yield curve, etc., stay out there, the lower the risk is for an actual serious economic recession, crisis or downturn also. So actually a lot of these risks are quite mitigated now, even though a lot of these risks persisted for way longer than we anticipated. But in that case, we really see already economic conditions easing, financial conditions easing, things like the bank term funding program. I mean, it's basically 18 months ago, a lot of the fiat banks in the US for crypto, they really blew up that time. The bank term funding program had to be funded at that time. A lot of these emergency liquidity lines, they're basically being drawn to less and less by financial institutions. So financial tightness or financial conditions index is all really much on the easing side. We of course know when the yield curve normalized. It was actually around August, when also the yen carry trade unwinded. We really saw steep volatility in the market. Bitcoin dropped to roughly 9,000 intraday, so that time was still, I think, 17% drop in a day. It's quite some volatility. So we still have somewhat of those risks to mitigate and to overcome in the near term. But in terms of cyclicality, if we look really at the halving cycles, or zoom out from the halving cycles, we always say a crypto is cyclical, but the overarching cycles are really the US election, liquidity cycles, but also then short-term business cycles. And they all really point for more upwards movement in the near term, and especially over the next year. and also in terms of cyclicality for crypto. We had the price prediction last year already in November, so now 1 year later we actually reiterated it, saying that most projections we have, also in terms of risk models and forward projections of diminishing returns, how cycles behave, that it's very, very likely for Bitcoin to trade definitely above 150,000 for next year. And our cycle peak we actually had last year already, and we just reiterated it, and now I actually have more confidence behind it. Was 180 to 200,000 roughly for this cycle. So whole capitalization for Bitcoin would be roughly 4 trillion. That's still only 1/4 of the size of gold in terms of market cap. So we're definitely very bullish over the next decades, but people calling for flippening of gold, etc. I think we have to sit down.
It's a little bit ambitious, huh?
We still have to sit down and wait and relax a little bit. But I think Bitcoin roughly doubling from 100,000 throughout this cycle is sort of on the moderate end in terms of predictions. So we don't know what's going to happen. Strategic reserve asset for Bitcoin, or then some game
one of our calls, by the way.
Exactly. I mean, if that happens, then it's not even the US that drives the price, but I think the game theory kicking in and a lot of other nation states having to buy Bitcoin to not drop behind even further under the upcoming administration. And then I think last year we already gave that bull case. If we were to break all models of diminishing returns and of an exponential growth trend for Bitcoin, then it's even upwards of 300,000. But I think that case we will see as it goes. But in terms of general cycle dynamics, we can expect anything around 180,000. I think is a decent target for the cycle.
What about the notion of a super cycle? What do you think about that?
I mean, every cycle so far was predicted to be a super cycle.
Yes,
so I think if any cycle is going to be a super cycle, I think then this cycle is the most likely. And the reason is not because of the general adoption we have, but because of accelerated adoption under the new administration and nation states actually now jumping in. So, but they would have to jump in steeply, because now over 1 year, I think the ETFs accumulated roughly, or institutions accumulated 1 million Bitcoin, and the US says our strategic reserve will be 1 million Bitcoin, and we saw the price didn't jump that crazy throughout this year. I mean, yes, we're up almost 3x throughout the year, but if the US says we're gonna buy 1 million Bitcoin over 5 years, then the impact is actually gonna be less than the ETFs now. So it will come from a global game theory scenario really taking place, nation states adopting it and having to front run or keeping pace with the US.
Yeah,
that would be the super cycle. I mean, we wrote it also last year.
Let's break the models.
If we were to break the models, it's some outlier catalyst, and I think that might actually now be the case with the nation states buying it, not even adopting it and endorsing it, but saying we buy it ourselves.
What about you guys? Would you challenge the view, or
no?
No,
it's a good view, but if I have to say a number, I would say I expect 150K, a bit more conservative.
More conservative, fair enough, and you?
But I wouldn't challenge
on the bearish end almost.
Yeah, I think definitely expected would be 150. Bearish case 135 minimum. But expected 150, and then you could even touch
bearish case.
Bearish case,
good one. Bearish 135.
Yeah, bearish case. But if I think about our first episode, Dominic, when we had Alex Crew on. Yeah, 2.5 bears was the title of the episode.
True, yeah.
So I'll maintain the bear in the closet a little bit here, but I'd definitely say that we could, there's always this Black Swan event that just comes out of nowhere.
Yes, that's true.
And I hate to say that I think Europe is kind of like that... this kind of like zombie right now.
At the end of the bull run.
And exactly. That's what I'm a bit scared of. Yeah.
I mean, it's called Black Swan because you don't really see it coming. But what would be like scenarios of a Black Swan event in your view?
It's definitely some sort of calamity here in Europe, more so than the United States. So I maintain that the US could certainly see a soft landing. The trouble is that the global systems are not siloed. They're interdependent. So we have the risk of contagion coming out. If you think about France right now, not being able to meet its own budget and its payments, and then unfortunately Italy as well is rather over indebted, and then you have Germany as well currently not deindustrializing. It's kind of a little bit of a gloomy picture within the European Union as to how it is they want to go forward, and unfortunately, depending on the political landscape and how that turns out, my only concern is really within Europe, and that then ending up spreading. But everybody else has already started printing money, if you think about China. So, eventually something might break, and then they print again, and then we're back up.
Yeah. We also have this like kind of demographic pressure with almost at least in the developed countries of a declining kind of population somewhat. And yeah, maybe the money printer jumps in, and then like these were like somewhat economic risks, right? Then there's still some geopolitical risks on the radar that might like materialize. And then from the tech side, or like let's say or nerd side kind of, there's also like, I don't know, maybe AI is posing a risk somewhat. And then also like recently, Wolfgang, with your physics background, maybe you can touch base on this. There, I think like one of the drivers recently of this, like, let's say small dip, I think was this breakthrough announcement from Google when it comes to quantum computing.
That effect.
Yeah, for sure. I think like many people were concerned that like these machines like break encryption. What's your take on this? Like, like how real is that threat?
Very, very good point. I mean, it's super real. I mean, the article is there.
Damn.
Nature, peer-reviewed, high quality. And it was a real breakthrough, absolutely, because it shows that for the first time, you can scale up the number of qubits and have more reliable logical qubits. So you increase reliability by increasing the scale. So basically, you go from a theoretical way to solve these algorithms, to solve these problems, to something that might be practical at some point. The question is when this point, and also, I believe it when I see it, it works for now, but you need to scale up and make it actually work to be real. However, I mean, the threat is clear, but it's not like the crypto community that goes beyond blockchain, by the way, just waits for this to happen. Like there is a countdown and then we are doomed. It's not like that, Okay. We have quantum safe cryptography, and the idea would be to switch at some point from current cryptographic primitives that can be broken by quantum algorithms that we know today. They're just not feasible because we don't have the scale and the reliability needed to get there. We replace them with quantum safe algorithms. So there is a strategy, and we also have it in the beam chain, I think. It's one of the sectors, one of the things to be improved for Ethereum 2029, 2030. And at some point, also, Bitcoin will be forced to do this change.
Oh, nice.
So you think we will be just in time to be ready for this potential threat?
Yeah. I mean, I think we are basically already ready. It's just that it's not super urgent.
What other threats could that pose maybe to other more traditional systems? Like maybe even blockchains are like coming out in a superior fashion of such a breakthrough. Is that a possibility, or like how do banks, for instance, adopt if we see like quantum computing like being really tangible and posing threats?
Yeah. From my point of view, they have the same issues.
Same issues.
It'll just
same issues, same solutions.
Yeah,
then.
and
Fair,
maybe for a centralized service, it's easier to coordinate and say from now on we do the change because it's needed.
Yes,
it's much easier for a centralized service or centralized network than for Bitcoin to reach a consensus. But at some point it will be needed.
However, like we pointed out before, like that if Ethereum is still like way less ossified than Bitcoin is, right? So it's like more agile to kind of adopt to threats like that. Do you think like at least that's how I understand it, like Ethereum will be ready, will Bitcoin also be ready for such a threat?
I'm sure. I mean, it's a necessity.
Yes.
And, these things happen relatively fast, but it will not be really overnight. So this is something important. It's urgent. It's clearly needed. And, even Bitcoiners, that don't want to change that much, that are for ossification, they will tell you, we don't want changes unless they're urgent and required. So we don't want to do changes, some of the Bitcoiners, not all of them. We don't want to do changes to make improvements for the future because we rather value the ossification. But if something is really important, it's super urgent, then we need to do it.
Then they move.
The incentives are there also.
Of course. It must be done. And it will happen.
Yeah,
That's my prediction, but not for 2025. I mean, I think.
That was really valuable insights. and you have the expertise to deliver it. I think we are like somewhat inching closer to the end of our session here. Maybe before we stop this, I mean, we just touched a couple of our top predictions. There's the report will be like way more comprehensive, but maybe we could, because the audience can still read the report, maybe we could briefly cover which predictions did not make it into the outlook, in the current outlook, and why. Were they too bold? Were they less relevant? So, I mean, you now have the chance to come up with a banger and be like really bold. Maybe starting with you, Laurent, do you have one?
Do I have a prediction that didn't make it into the outlook? Well, yeah, I do, but partly I also wasn't part of the development of the outlook this year. But yeah, I think for me, one of the challenges is that my prediction is that Bitcoin has never been stress tested in a systemic financial recession before. Since 2009, the stock market has continuously gone up. Even in 2020, it ended in the green. And provided that we have a somewhat adverse macroeconomic outcome in 2025, I think that there is a risk that we don't foresee. While it might be small, it's non-zero. But yes, that's just a not so hyped.
Yeah, fair.
Unfortunately, but maybe towards the end of the year.
Okay, so you would say there's like a substantial possibility, but you wouldn't make a call that we are running into like deep recession territory next year.
I think it's definitely not impossible.
For sure.
Absolutely
There's
not impossible.
Non-zero chance.
There's a non-zero chance, but just by the looks of things, I think that at some point you can have this blow off top. We will see the prices that we've predicted. Mm-hmm. I'm confident of that. I'm very confident actually. But I do think that once everybody starts hitting the sell button, the natural instinct is just going to be, I need to pay my rent. Yep. I need to sell, and I need to get out. For of the
sure,
market.
I fully agree. Maybe
we have not eliminated bear markets yet.
Yeah, no. But before you're coming up with your banger, we didn't talk about the timelines. Like when do we think do we hit the cycle peak next year? What's a rough estimate?
I mean,
do we talk about Q1, Q2, Q3, or is it not even happening in 25?
I think we still stick, at least from my analysis and insights, I would say it's still definitely in 2025, and roughly in terms of estimation of a time, it is definitely towards the end of the first half, I would say. It's also the projection we made 1 year ago, pretty much. So in that, along those lines is also when we predicted Bitcoin dominance is going to fall roughly start of next year. The altcoins are going to rally, the whole market capitalization is going to increase tremendously, and peak territory would still be roughly mid of the year. I think in terms of institutional adoption, it doesn't mean that we're going to see the bear market of the last cycles in terms of depth, but we'll definitely see one, and the cyclicality, it will be smoothened out, but we are also still going to see a bear market. It doesn't mean we're going to crash after summer and come down 50% in terms of prices, but there will definitely be some subdued price action, leaving all else equal, of course, something like a supercycle, unforeseen catalysts. And of course, all of those scenarios, if we now get major shifts in macroeconomic conditions in Q1, then all the models will, of course, adjust to that, and we might not even hit it as we currently predict. So it's all dynamic. It will all shift as we go. But currently, if I were to give a most confident bet based on the stuff we looked at, how things are right now, I would say roughly give or take around mid-year. Mid-year, end of first half, roughly.
By the way, before we hear your maybe take that did not make it into the outlook, I really adore how you throw out these hugely bullish numbers with a completely neutral expression. It's really funny. So, which take did not make it into the outlook for you? Can be highly controversial
in terms of predictions about how the world might change, or
and what regard?
I think what Laurent also mentioned, some of the stuff. In the inner EU troubles that might increase. I think it's going to amplify under Trump, and I think actually also the EU is really forced to adapt or change quite some approaches, how it's now maybe hopefully happening in the US in the next 1 or 2, maybe even 3 years. Otherwise, I think also inner EU crisis might amplify, but I think that's not really too relevant for crypto, but it will definitely shift the picture of the global dynamics, capital markets, economies. That's definitely something to look into, because that will be quite volatile, I fear, in the next year still.
Okay, great take. I think we covered a lot of political stuff. Hopefully we didn't cross the line when it comes to political spiciness. But Wolfgang, which take did not make it into the outlook?
So there was one that I didn't include, and it was very specific. I was predicting that we will see, and it's bold prediction. I'm not really convinced about it. Maybe it's more of a wish than a prediction. But I would see an Ethereum roll-up stage at stage 2 of maturity being live on next year. I think there is a lot of competition, or even good competition between these roll-up clusters, that they need to find a way to differentiate. So you have OP mainnet and Optimism Superchain, you have ZK Sync, you have Arbitrum, you have Polygon with this aggregation layer. They're all trying to compete, and I think there is a good opportunity to be the first roll-up to achieve stage 2 maturity.
Can you go into the details
get
what
rid
that
of
means?
the training wheels.
What does that even mean?
Yeah, that means that it's an actual roll-up, and there are no security councils that have excessive power, basically. Today, we cannot rely yet on the security we cannot fully trust the security of the roll-ups as they are. So you have this kind of mechanisms and security councils to have a final line of defense, basically, if things go really wrong. But technology is getting more mature, and next year we'll have things like multi-proving. It's already live in some, for some projects, but when the technology becomes more mature and we are really feeling safe about these roll-ups, then we can remove some of the powers that the security councils have and have a system that is more, reliable and safe without centralized components. And I think, so nobody is there yet, but I think next year there will be this opportunity to differentiate your roll-up framework by being the first that achieves this stage 2. I think that's happening. Well, I didn't include it in the prediction, so it's not super high conviction. Yes, maybe it's a wish. We'll see. And the other is about Bitcoin covenants, that instead I don't see that happening next year. Not because the tech is not there, the tech is there, but because it's really hard to achieve consensus on the specific implementation to provide covenants on Bitcoin. And then basically make BTC more programmable, add conditions on how BTC can be spent. Suddenly you can do very nice things like Bitcoin restaking in a fully trustless and decentralized way. So I think covenants will happen. I don't know if it's with OpCat or something else, but I think it's hard to have it next year. Because again, the clear, strong necessity and urgency is not there. And there are many options to implement covenants, and it's hard to decide which one will make it. There are also social consensus issues there and different factions that promote different ways. And we have seen very resourceful projects doing roll-ups on Bitcoin anyway. They're trying.
True. Getting quite some traction also. Yeah.
So you see, this removes the urgency and the need to really force upgrade to the Bitcoin software.
Good one. When it comes to me, I think I would have liked to, especially us with more of a academia background, I would have liked to cover decentralized science. But it's also maybe too early to make a tangible call on this. There's some struggles when it comes to journal publications. Also, decentralized science might pave the way to more efficient research and things like that. But there's also a lot of noise, and I felt like it was overhyped. But let's see next year how this develops and if there are more tangible outcomes. And I think with that, there was a really cool discussion. I really enjoyed it. To the viewers at home, we all hope you also enjoyed it. If you like the content, don't hesitate to amplify in your socials. And then what else? Merry Christmas.
Merry Christmas.
I think last year just huddle and enjoy the ride. We've been basically waiting now for 3 years to be in the bullish territory. We're here.
Yeah.
So don't zoom out too soon, I would rather say.
And also not too late.
Not too late, but also not too soon.
Yeah, true.
But I think we'll be there along the way. So.
Did you enjoy it as much as Rave? I wasn't there though. I felt I got a little bit of FOMO from that one, but I think
Rave was good.
Rave was good. And you, Wolfgang?
It was awesome.
Okay.
Yeah,
meeting people that you talk with only online or even anon accounts.
Yeah.
Yeah.
Nice.
Things happened.
If this makes it into the cut, kudos to Stani for organizing these great events. It was like, for anybody not familiar with it, it's basically like kind of the flagship rave organized by Aave for DevCons and ECC. So I enjoyed myself. Wolfgang was clearly enjoying himself as well. I saw it. And yeah,
That's good.
I think for everybody, like, have some rest during the holidays and see you next year.